give you the markets update now. The JSE set for another rocky session today as the Russia-Ukraine showdown enters its 13th day with no end in sight. The local share market has held its own relative to its counterparts in Europe and elsewhere, and will today focus on South Africa's fourth quarter GDP numbers. To help us make sense of how the markets are doing, we're joined by Makwe Masilela, Chief Investment Officer at Makwe Fund Managers. Mr. Masilela, I usually talk to you on Thursdays. It's a Tuesday. It means that it's probably a big day. It's a day that we are going to see GDP numbers being released. But before we talk about that, tell us how the markets have opened in early trade with those GDP figures in mind.
Morning, Tole, and morning to the viewers. Unfortunately, we are continuing that fall that we've seen, which started on Friday when it comes to the market. And Tole, it's all a question of these soaring commodity prices, all these sweeping financial sanctions that we are seeing, and also a potential when it comes to the ban, when it comes to the oil imports coming from Russia. And all those things are threatening an economy which is still struggling to get out of the woods after COVID-19. And also that complicates the job when it comes to central bankers, because the guys were busy trying to phase out easy money. The JSE, just like international peers, opened in the negative territory.
Let's talk about the commodities for a moment, Dr. Masilela. The surge as the war between Russia and Ukraine intensifies. Now, there are fears that these developments are going to put the entire world in danger of hunger with the concerns of the ripple effect of this war.
Definitely. Just to give you an example, just when the market opened, you nickel, which gets to be used in steel manufacturing, steel making, and also gets to be used when it comes to electric vehicle batteries. I mean, a ton of that just touched $100,000. That's even more than a price of an entry-level vehicle. And it shows you that it's not only just the ordinary metals like gold, which is firmly up 2,000, but agricultural products as well. Look at wheat. Wheat, we know that the likes of Ukraine and Russia, they account for more than 29% of the exports. Corn, they account for almost 19% of the global export, and also sunflower oil. And bearing in mind that even stuff that they don't produce, you've got stuff passing through the Black Sea, so they get to be affected. People might have to look for other routes, but as it is, food prices, which already have been at record highs, their chances are they're going to continue to go up. And unfortunately, as you said, people will go hungry. Hunger will be there, and that's not a nice thing at all.
Locally, all eyes will be on the release of the latest GDP data from Statistics South Africa. Expectations are that the number will be a good one, or perhaps that's something that was before the war started. Knowing what we know now, have those gains already been wiped out?
Definitely, this to be a good one. Remember, the third quarter, the numbers were down 1.5%, all because of that July unrest. And we know that the negative main contributors thereof were your trade, your manufacturing, and agriculture. And we had a 1.5 decrease in quarter 3 after we had a nice increase of 1.1% in quarter 2. So obviously, we're expecting a bounce back for quarter 4. But as you are saying, the biggest thing is going forward. And also note that for the whole of 2021, we'll still see an improvement, because 2020, we had a fall of almost 7%. But you are right, you look at our treasury, or the government through treasury, the likes of the World Bank, they expect that 2022 numbers should at least see a growth of 2.1%. But that's before the war, as you're saying. Yeah. And also we know that with inflation going up, totally inflation itself dents your economy. And also you get a situation where in South Africa, where more than 60% of our economy is driven by consumer demand, and we've seen what's happening with the final household expenditure continues to go down, and also in an environment where unemployment is very high, and let alone the fact that our central bank has started increasing interest rates, and we know that for any economy to grow, you need people to have money to be able to spend on the economy. So yes, things are not looking okay, because we don't know how long will this war last and what will be more other implications when it comes to war. But yes, whatever focus that we had, I think we have to revise them.
Let's conclude the conversation with a bit of company news. Royal Bafokeng Platinum publishing its annual results and dividend. That is always good news for investors, isn't it? How has the miner fared?
Definitely, and then look at the dividends for the whole year. I mean, I think the guys have returned almost 3.5 billion in the form of dividends to shareholders. And it's not surprising that you get the likes of Northam Impala and Impala Platinum trying to fight for it, because they can see that this is a nice, good player. And yes, the guys operating in a very challenging environment, but managed to increase their production to a record. And yes, EBITDA up 28%, profits as headline earnings per share up 71%. And as we know that Impala has made a firm intention to acquire the number of shares that they don't own now. As we said, they own just over 35% thereof, and the offer price was 150 per share.
Makwe Masilela, thank you very much for that markets update, Chief Investment Officer at Makwe Fund Managers.